Welcome back to Callahan's Corner here, where you ask the questions, I answer them live on Facebook. So what we're going to be doing here is diving into some questions that were just asked about data, how do we track it, and how do we actually go out and raise our prices to our new clients each and every year. And one of the biggest mistakes that I feel that's happening in the service industry, whether it's lawn care, home cleaning, pest control, is we've all gotten the bad habit, myself included, back in the day, where we would literally go out and say, at the end of the year, we're going to raise our prices by 3%, or we're going to change it by $5 a mowing, or whatever that is. But it's a fixed amount that you would spread as an increase across all your clients. Where this is really, really dangerous is you are potentially jeopardizing your most profitable clients and getting them to shop your services. So in the next 8 to 10 minutes here, I'm going to answer your questions how database hygiene, good data in your system, and tracking things on a daily basis can drive good end-of-the-year results with a non-emotional price increase. So comments and questions, drop them live here. If you're watching live and you can hear me, just to check the audio, give me a thumbs up that the audio is good here. But as we're diving into, the first thing we want to look at here is on my screen. I'm going to dial it down. But basically, we've got some fictitious accounts here, and normally there is the client's name here in the column, but I've shrunk this down just so you can see everything on the same screen. But all these different stops here are, in this example, lawn mowing or fertilizing. The idea is I just want to give you an idea of what the data looks like and what we're looking for. So no matter your CRM, I want to say what's up to Matthew, brother. Watch out this weekend. We've got some snow coming for you here. So looks like a doozy. So anyways, we've got everything here in Service Autopilot, but no matter your CRM, your customer relationship management software, even if you're using pen and paper or Excel, this is what we did and we built into Service Autopilot. So the idea is we've got the guys and girls out in the field, and they're going to be clocking in and out. So this team clocked in between 8:07 to 8:26. This one here was 7:44 to 8:06. But the idea is this is called your closeout day stream. So before you dispatch your jobs, at a bare minimum, you want a price and a budgeted time for accountability for your team members with the quality constraint. Now, once you have that, now they're out in the field and they're plugging this in. So if you're using the mobiles in Service Autopilot, these start and stop times will automatically show up. Times vary here. When I click into it, is actually going to show you the multiple team members here as well. And if the time varies, if somebody clocked in earlier or later than the other ones, it would be shown here. But that's okay. We want to just click in there and make sure those start and stop times make sense. So the ideology is it's a sanity check. So the start and stop time makes sense. They're not in like a minute. So the biggest problem we see when most companies use mobiles, no matter the CRM, is the team will get to the job, they'll do the job, they'll get done. Like, oh, we forgot to clock in. So they clock in and clock out immediately. And that gives you bad data. It looks like you made $1,000 an hour. So the first workflow training that we recommend that we use with Callahan's is someone in the office at the end of the day or the beginning of the next day before the crews get in, need to go in and just have a quick visual representation that start and stop times make sense. There is, in fact, a start and stop time. We have budgeted hours for each job and the number of men or ladies on the crew. Now, in Service Autopilot, if you go into columns and you go into variance and total or actual hours, it's going to add some additional columns. So now we can go in and say, okay, the variance, if it's a negative, is under budget. And if it's a positive, we're over budget. And if it's 2 people, it multiplies the actual total time spent on property. So these are the main things you need to be looking at, in my opinion, on there. And the reason why it's important to do it at the end of the day or right at the beginning of the day is if something was screwed up, we can go to the crew and adjust it while it's still fresh in the memory and dial back to the GPS while it's fresh in the system. So start and end times, it makes sense, budgeted time, a price, and we want to pull out the actual and variance column. You would not believe it. In this test account here, we've got one that's at $0 an hour or zero price. So that obviously is concerning. And if you're using a installment billing in Service Autopilot or any other CRM, usually you can tie that service underneath the contract, and if the system is set up right, it will not double bill. But if you don't have a budgeted time and cost for that particular service that falls underneath, say, $8,000 a month installment program, you don't have any good data or really have no data at all going in to be taken care of. So what we recommend is in this process now that we have the closeout day screen here in good shape. We've got good data. What we're doing is we're going down and taking the budgeted hours, so 5.96 hours in this fictitious add up would be there. We're going to take that number and drive that into this sheet that we call our daily KPI plus accountability, and then we have job costing. So I'm going to show you how you handle this on a daily, weekly basis. Then I'm going to hop over to the next tab and show you how you actually raise your prices with no emotion to the penny. So fictitiously, if this number down here, total budgeted hours in a normal day, instead of 5.96, was actually 20 hours. We plugged the 20 hours in here. And what happens here is we go in and scroll across and we put the start and stop time of the crew, the total hours, the lunch, and the crew members' names and the number of people. What the sheet does is it grabs the total gross hours, subtracts your lunch, and gives you the total work hours or payroll hours. And then it says, okay, we worked 19 hours of payroll and we gave them 20. We were 1 hour under budget. Now, that gives you complete transparency and accountability to what's going on. As you scroll to the right, each one of our crews are in here. So the idea is it's forcing someone in the office to manually check this for 2 to 3 minutes a day per crew. This can be automated, but when it's automated, we forget about it. And obviously, if you've ever watched any of my videos, I'm a big proponent of automations. This is one process I do not recommend automating. This is very, very important because what's going to happen is that closeout day screen here in service autopilot is the last point that someone can physically touch it. A human can touch it in your system because when we hit midnight at 12:01, whether you bill daily, weekly, or monthly, this information automatically creates your invoices and it goes into your report center for payroll, production rates, and job costing, which you would raise your prices or lower your prices on. So this is important, extremely important. Good data in, good data out. Spend 2 to 3 minutes a crew per day, and I'm going to show you how you can create accountability in your business really quick with this to drive big, big, big bottom line profits. So as you can see, this 105 here, as you can see where my cursor is, if we are under budget, the number is higher than 100%. Not that our field staff is stupid. At least my team was extremely intelligent, but a lot of times it was hard for them to conceptualize the actual versus budget. So what we did is we built the formula. So if it was higher than 100%, and we could use the analogy of if you gave 105%, you kicked butt, you did more than you had to, you're an hour under budget. If I manipulated the budgeted time to 19 hours and it took them 19 hours to do it, this percent of budget now, when it updates in the sheet, is going to be at 100%. So if you do your job and you give 100%, you hit your budgeted time with a quality constraint, perfect, you did 100%. If I gave you 18 hours and it took you 19 hours to do it, you're 1 hour over budget, it's at 94%. So I can easily have a conversation. You only gave 94% today. You didn't give the 100% you needed to do your job with a quality constraint behind it. So what we do is take this percentage, hopefully 100% or higher, and put it as public accountability on the dry erase board, the chalkboard, or the TV in the shop. And we have public accountability for each crew as a percentage of budget. So whether you're budgeted 5 hours a week or 100 hours a week, it's an apples to apples comparison. Now, where we made the mistake is we went out and did not have a quality constraint at the beginning. So we additionally went out and had our one of our managers go out and do an internal audit of several of the lawns or properties for QC with a plus or minus that would be put behind us, and we would have customer feedback plus or minus on there. So we had production rates that were tied for public accountability with quality constraints. This was big. And eventually, as you scroll to the right, you have multiple crews. The sheet adds up the overall budget versus actual for all your crews. So you can see on a high level, if you were budgeted above or below for what you were for the week, and it's going to force the person doing this to feel the pain of the 1 or 2 crews that are bleeding you dry. And trust me, in my experience, you'll have the majority of your team and crews are making you money and doing what they should do, but 1 or 2 crews are going to literally just bleed you dry and suck your bottom line profits. The thought that this is not automated is going to force you to feel that pain and help somebody get on their truck to fix the issue. So that is the methodology here, why we want to make a manual process. So we've got each crew broken out with a percentage for public accountability in the shop, quality constraints, and then to answer the final part of the question is, how much do you raise your prices this year or next year across the board? The answer is you don't. What you do is you take a job costing report that takes the data from your dispatch board. And if it's good, clean data, you export it into an Excel sheet or Google sheet like we've made. And in this example, we only have 2, but you would have all 30 or 40 cuts in there. And I recommend doing this job costing report in July, and then November, we've got a good statistical mean. And in July, people aren't shopping lawn care companies. So if you end up having to raise their price, most lawn care companies aren't returning calls. And then November, December, we tackle them before we renew them for the upcoming season. But the idea is we've got a mowing here for $54 a cut. And we made $54.28 here per man hour and $60.31 per man hour. On average, we made $57.30 per man hour. And that number came directly off the data from this screen, the start and stop times. That's where it's really important to have this good statistical data coming out. And now, once we've done this here, if we tracked our start and stop times with the mobile, we have a drive time cost effect for non-billable time. So we're tracking that as well. And the idea is if our goal is $60 per man hour and we're averaging 57, we are about $3 or $2.70 lower than our actual revenue goal. So we're not hitting our goal. So what this sheet does without any emotion says you need to raise that price right here, $2.56 a cut on average to hit your hourly goal of 60. But conversely, let's say our goal for this upcoming season is $55, and we're already generating $57.30. The sheet says you don't need to raise your price. So very similar to Jack Welch and GE, we're only raising, say, the bottom 10%, and actually in this instance, we're only raising the losers that aren't hitting our financial threshold. So we aren't jeopardizing a mass exodus of our client base shopping us. We are simply raising the prices to the ones that aren't hitting the financial threshold or the hourly goal that we need and raising them up. And if we lose them, we can replace them. So this is a non-emotional way to raise the prices on only the specific accounts that you need to raise. And it's a very good way, in my opinion, to go in and continue to have profitable accounts. Because in my opinion, that I've seen, at least in my company, I've got accounts I'm making $80, $90, even $100 an hour. If my goal is 50, there's no reason to ever change that price unless I need to get $100 an hour. So I'm double the profit goal there. Leave them alone. Only raise the prices on the ones that aren't hitting your threshold. And then the final part here, before I finish up here or answer any live questions, is the lot size. So if you're using something like Service Autopilot or even an Excel sheet, we should be tracking the lot size, the turf square footage or the gross square footage. And now we're going to have times to mow, blow, and edge or stick edge, depending on your part in the country, of how long it takes your guys and girls with your equipment and your production to go in and manage a property of 5,000, 10,000, whatever that is. We have now enough data to average out and figure out what it takes you to produce lawn mowing at those different increments of size with your team and your crew. So no longer do you have to go on Facebook or read a magazine and see what the industry average is or ask somebody that probably has no clue how long it should take or what you should charge, because every market's different. Every piece of equipment is going to be different depending on the market, and everybody's overhead is different. So I recommend don't get sucked into the temptation of going on Facebook and asking what you should charge or how much you should raise your prices. Do the homework, set a foundation, and create daily accountability through something like your closeout day screen. Once you have it, drop it into a daily KPI and accountability sheet like this here. Take the percentage of 100, explain to your team what the 100 means. You hit your goal. Above 100, you beat it. And below 100, you didn't give 100%. So you didn't beat your budget goal. You're over it with a quality constraint. And twice a year, you take that data, you export it out, you put your hourly goal, and with no emotion, you know what you need to raise the price. And one of the tips that I did at Callahan's was I would take this here where the name was and actually black it out so I couldn't see it. And I would just make sure the math and the data was good. And I'd fire that over to Christine or Tammy. And not emotionally, they'd raise the price as they had to. So if I had old lady Mrs. Smith that I've been cutting since high school and she added 20 trees in her backyard that took twice as long, we all know watching this video, I probably wouldn't raise the price if I knew it was old lady Mrs. Smith. I've taken the emotion out of it and created a standardized business for predictable property or profits with transparency, with daily accountability for the crews with a quality standard. Comments or questions, drop below. Hopefully this is helpful, answers the questions. Once again, Callahan's Corner coming at you daily. You ask the questions, myself and the Simple Growth team answer them live on Facebook Live.